Good morning, everyone, and happy Friday, February 14th, and happy Valentine's Day to everyone in the room. I'm so excited to have you all here today. We have a pretty big group, which I'm excited about. As we start off today's session, I want to make an announcement that the upcoming 3-day coaching event is going to be not next week, but the following week. And as a special Valentine's Day gift for each and every one of you, I'm going to be doing things a little bit differently for that coaching event. Um, Before we do that, and before I give that away, I had on the screen here an introduction quiz. So just to get your minds thinking of the trading day, what's going on. This is actually a recent setup that's been going on Apple. But if you were looking at this chart here, and if you're just coming in the room now, the question is, where would you look to buy? Are you going to be buying on a pullback to B, saying Apple's in an uptrend, or would you look for a pullback to A? So let's start with this and see where everyone's at. Just scrolling through the comments, I see, let's see, we've got 4 Bs, we've got an A, 2 As, we've got a B, bunch of As. So we are very, very mixed. Interesting. Let's see. Dwayne says 2 candle flip within a 2 candle flip at the start of the big move. Wiki, I like the analysis there, Dwayne. So these are the questions that we want to be able to solidify. And again, just going over the comments, I would say it's a 50-50 split of A and B. Now, what we're going to be doing in the upcoming coaching event, we'll do it a bit today in this live trading room, is being able to identify exactly where that zone is located. So I took this from one of my coaching students who inspired me to want to focus in on this question. But you guys ready to see the answer? The answer is B. All right, so if you said B, you are correct. That is the zone where when Apple was pulling back, price dropped down into that basing area, and we took off from there. So this example is actually one that happened this week. You can see this is a live chart here on Apple. We had this pullback here. This happened, it looks like Tuesday at the start of the session, or actually Wednesday. We dropped down. We even gapped down into that basing area, and that was a strong enough zone for price to shoot to the upside. Now, if we're not sure of where the best zone is, we want to be able to work on that. And that's inspired me in your feedback of where are we still struggling with our trading and how can I incorporate that into the upcoming 3-day coaching event. So to walk you guys through B, so if the answer is B, let's find out why. So inspiring kind of what I want to do in the coaching sessions with everyone this upcoming event, I wanted to make the quizzes based on your questions. So a student request that I received for the upcoming coaching event, which is going to be again next week, but the week after, is how do I identify scalp trades? So that was a chart set up on a 15-minute time frame showing Apple, and that would be a scalp trade. We're looking for a pullback into that zone and then taking it to the upside. So what I want to share with you now is that these examples here and these quizzes are going to be incorporated throughout the upcoming event. If you're not aware, I just want to start off our session giving you that announcement. The next upcoming 3-day coaching event is going to be February 25th, 26th, and 27th from 2 p.m. to 4 p.m. Eastern. We had a huge turnout with the first event, so I'm hoping we can get as great of a crowd as we did for the last one. But this 3-day coaching event was very interactive, engaging. We're bringing in your questions into this event and answering them real time. And all the content is based off of what you guys are asking. So again, one of the questions was, how can I identify these zone trades and scalp trades? And that's what you're going to see in part of today's session here. So as a Valentine's Day special for each and every one of you, that's going to be the next screen here. As a bonus for the next coaching event, what I'm going to be doing is offering a complimentary 30-minute one-on-one coaching session with me. The purpose of this coaching event is to prep you for the 3-day event, which is going to be the 25th, 26th, and 27th. If you're part of the first event, you know the general layout of the 3-day event. But I'm incorporating and giving each person in here a 30-minute one-on-one coaching session to prep you for the 3-day. The reason why is I want to get to know what's going on with your trading, what products are you looking at? Is it stocks? Is it futures? And more importantly, what are you guys struggling with? I want to work with you one-on-one for 30 minutes to build some of that content into the upcoming 3-day event. So that's one thing that I'm doing differently. And then also for everyone in the room today for registering for this upcoming or for this complimentary showcase instead of the $299 for the upcoming 3-day coaching event, it's going to be $249. So I'm going to post the link in the chat now for the discounted rate. And this link is also going to give you the access to the complimentary 30-minute one-on-one coaching session with me. And I'll go into more detail on that later, but just wanted to give you kind of a heads up of where we're going with this. Again, this event is going to be based around your feedback. So this was what inspired me to create some of these quizzes is when a student asked me, how do I identify scalp trades? And let me ask you guys in the room, how many of you guys like to look at the smaller time frames? Maybe for entry points, if you only look at the smaller time frames, but how many of you guys look at small time frames? Let me know. I know typically I focus more on the higher time frames, so pretty sure everyone knows that, but how many of you guys look at the smaller time frames? If not, that's okay. See, Patrick does, Dwayne, Greg. Go there, but not comfortable. All right, Terry. And that's kind of why I took this one student request and I'm building it out so that you can go from being not comfortable with scalp trading, maybe being uncertain of where your zone trades are or your breakouts, and then having a step-by-step process. Oh, nice, Mary. 5-minute for entry only. Craig does, especially for entries. Nice, Jimmy. Smaller meaning less than 15 minutes. Smaller, like 1 hour and less, I would say. All right, so again, this is just based on one student's feedback, and you can see a lot of other students in the room enjoy scalp trading and small time frames. Again, this is just one piece of what's going to be in the upcoming 3-day event. What I'm doing is I'm taking student feedback like this one. How do I identify scalp trades? And then I take that and I offer a step-by-step walkthrough and an answer. So if your question is, how do I identify swing trades? Then you're going to let me know in our one-on-one coaching session, that 30-minute session, and I'll build out a walkthrough, a step-by-step walkthrough for the 3-day event. So let's go through this example. How do I identify scalp trades? Well, you're going to be using my signature heat map strategy. This is something I talked a little bit about in the first 3-day event. If you weren't there, that's okay because I'm going to be breaking it down in more detail based on your requests. And it is going to help with identifying scalp trades. Many of us know heat map as sort of this layout here. You can Google heat map for stocks, and it shows you different stocks that are moving up in price, that are moving down, pretty much the big movers. And a lot of people go to this to focus in on which ones that you should be trading. So in this screenshot here, Apple is up 1.49%. Then when someone sees that, they may jump over to Apple, look for a long trade opportunity. If maybe you see Google is down 1%, a lot of traders will then jump over to a Google chart and look for short trade opportunities. What I do is I take this and then bring in the strategy for scalp trading based off of this heat map, and then using my signature heat map to identify entry points for scalp trades. So if you're not comfortable, that's okay. Again, it's going to be broken down. So how do I identify a scalp trade? Step 1 is to identify the heat map. So the heat map, I've drawn it here. We'll go into more detail during the 3-day event, but in order to find the best trade opportunities, what the heat map does, it shows us where there's the largest imbalance of orders. So in simplest terms, we look for breakouts of support and resistance. On this example of gold here, 15-minute time frame, we want to first see a breakdown of support. So here you can see we have support, support, breakdown. That's going to be step one, is look for that breakdown of support. And then we also want to see, after price breaks through support, we then want to see a breakout of resistance. So two things here. We want to see a breakdown of support, which happened here on gold. Let me zoom in. Breakdown of support, followed by a breakout of resistance. We'll mark our support breakout with a green box and our resistance area breakout point with a pink box. So now we've got resistance and we've got support. That's what we consider the heat map. Now, to identify where our trades are going to be moving forward for scalp trades, you'll take those boxes and extend them to the right-hand side of your chart. Now, what this heat map does is it's honing in on a very specific location of where your zone should be. So typically, in this example here, I included a little bit more detail from the event. We want to locate either the controlling breakout pivot or a zone for a scalp trade setup. So in this case, we have my signature 2-candle flip. That would be a zone. We want to look for our zone to be located near or between the pink and green rectangles, and then adjust the time frame if needed to identify your zone. So the heat map, when we mark the breakouts of support and resistance, it gives us a very specific location of where to look for a zone. Now, you may not use 2-candle flip or controlling breakout pivots, but whatever you use for a zone to take a trade opportunity, you're going to want to look for it in that red circle. So some people use rally base rally, drop base rally, 2-candle flip, wick over wick reversal, whatever that zone structure is, you're going to want to find it in between that heat map, resistance, and support. Once you do that, that's the zone that typically is going to be the strongest of all the other zones. So if you're someone who's looking to take a trade and you don't know whether to go long here, in this pivot point, down here, or at the origin, the heat map is a great strategy to identifying the very specific location. Hey, Terry, let's see. What is a wick over wick reversal zone? That is a great question. So that's one of the strategies that I use to look for where price ultimately changes direction. Let me see if I can find one on, see if there's one on Apple. So wick over wick reversal, it might be better to use a futures product. Let me come over to, let's say, crude oil. All right. If we're looking at crude oil, we can see that we're having some pretty big moves to the upside. With the wick over wick reversal is when we have two red candles coming down, followed by a break above the second red candle. Actually, let me come back a little bit further. Here we go. It's a good example. I kind of wanted to find an extreme one. So notice over to the left, we have two red candles coming down, followed by a green candle that breaks above those two red candles. When we isolate that area from the high wick of the red candle to the low point, that becomes a very strong place to look for a trade opportunity moving forward. So notice this would be called the wick over wick reversal because it's two red candles followed by a green one that breaks out. That is often a very strong zone where there's a large amount of buyers. We either want to look to take a long trade as price is leaving or when price comes back to that zone. You can see there's another one to the left over here. We've got two red candles coming down. Price breaks out to the upside. So on that one, same thing here. If we were looking for a long trade, we would isolate the two red candles. And then when price comes back to that zone, we often see price change direction. So it's a really good technique for looking for trade opportunities. When we're looking at this example here, this is going to be the two candle flip, but the wick over wick reversal would just be two red candles coming down followed by a breakout. That's ultimately our zone. When price returns back to our zone, that's where we look for the trade opportunity. So again, this was inspired by a student who said, I need help with my scalp trades. I'm not sure where to get in. I'm not comfortable with the zones that I'm taking, and a lot of them get stopped out or I'm picking the wrong zones. So I built this step-by-step process to help identify the highest probability zones. So if we come over to, let's go back to Apple and say we bring up our actual heat map. So do any of you guys use a heat map like this when you're trading? This is on TradingView, but if you just Google heat map stocks, it'll bring up something like this. Anyone use the heat map or know what it is? So it's pretty cool. Mary does, nice. Couple no's. Yeah, so if you just type in heat map stocks, it'll show you the stocks for the day that are the biggest movers. You can see if it's up 1%, 2%, 3%. Vinviz, Patrick, nice. So from here, you can look at Apple, for example, which was the one I'm using in the example. If we're up 1.97%, I want to look for a long trade opportunity to participate in this move to the upside. So coming over to Apple, if I'm looking for my entry, and this was from the quiz, so this was the zone that worked, where price came back down to it and then changed direction. So why was this the zone where price stopped instead of the one that was lower? Well, the heat map is what will help us determine which zone to take. So remember, it was either this one or this one down here. How we draw the heat map. First, we look for a breakdown of support. Coming over to the left, I can see we had the spacing area. Price hit support, support, and then we had a breakdown of support. So that's the first part of the heat map, is it's finding sort of a range of where we're going to be looking for our zone. Next, we want to see price break back up through that support and also break through some sort of resistance. So I can see the resistance was in the spacing area here. This price tapped there, we tapped there, and then we broke through it. So I mark my resistance with a pink rectangle. Once you've drawn your green and pink rectangles, you want to extend them all the way to the right-hand side of your chart. Why? Because that's the heat map. When you extend them to the right-hand side, when price returns to the heat map, that's where we look for our trade opportunity. How to hone in on the heat map is by looking for that zone in between the pink and green rectangles. So again, in this example, we're talking about scalp trading. This strategy, yes, does apply to swing trading as well. So we can look at some larger time frames as well, but just using this as an example, that you can use it for swing trading. So once we have the general area of where to be looking, which is in this pink circle, then we want to find our zone, which will either be a two candle flip, wick over wick reversal. We don't have that on this time frame. So from there, you'll come down to a smaller time frame, whichever one you want to go to. Look within your circle, because that's the area you want to hone in on, and look for a two candle flip or a wick over wick reversal. Now, can you guys tell me in our circle here, Do we have the two candle flip or do we have a wick over wick reversal? Good question, Scott. What if you have multiple supports? In this example, there are higher ones as well. Good question. So that's going to be more in the upcoming event to be able to go over that detail. To answer your question from a general standpoint, we want to find the support area that's closest to the resistance, because in this case, you can see that they're overlapping or they're right next to each other. And ultimately, we want them as close as possible so that we can identify where that heat map zone is. So if they're further away and you're using one of the higher ones that you mentioned, one of the higher supports, then you just want to be careful because then your circle is going to get larger. We want to keep it as small as possible and really find those breakouts that are as close together as possible. Great question. Let's see. So what do you guys think? Two candle flip or wick over wick reversal? We got wick over wick reversal. You bet. Two red candles coming down followed by the breakout. So that would be our zone. Absolutely. Let's see. I see wick over wick reversal. But can you explain two candle flip? Or is that the same thing? So they're similar. The wick over wick reversal is two red candles coming down followed by a breakout. The two candle flip is a red candle coming down followed by a green candle that closes within the range of the red candle. Now, do we have a two candle flip as well? I need some of my students that have been here a while, but we've got a wick over wick reversal. Do we have a two candle flip as well? That's our wick over wick reversal, and we can mark it as well. So over wick reversal, and we're just looking in this circle, but do we have a two candle flip? There we go. Thank you, Greg, Dwayne, you guys know. We do. So the two candle flip's going to be this one, Terry. Red markets are open. We'll come over to the live charts in a moment. Red candle coming down, green candle closing within the range of the red candle. So we mark that from wick to wick. Price broke out to the upside. That's going to be our two candle flip. So this is actually a great example that has both illustrations. Wick over wick reversal looks like that. Two candle flip looks like that. So now we've found our zones. As far as location, we're using the heat map. I want that in big letters over here. This is our heat map. Again, there's going to be more detail in the upcoming event, kind of touching on Scott's question. If there's multiple supports or multiple resistance, how do we identify the one that works? But that's our heat map. Find our zones within the heat map. Once you've done that, you can go back out to a larger time frame, or you can stay on your smaller time frame. And we can see price dipped into, let's see, it came into our heat map where we have our pink and green rectangles, and it hit our two candle flip zone. That was the upper one. Came in, hit that two candle flip, change direction, even gap down into that two candle flip zone and change direction. So what the heat map does and why it's so important and useful is because it helps us determine which zones to be looking at. If I come back to our quiz from before, which was where should you buy, A or B? Some of us said A, but now when we're looking at the charts, I can actually draw on my screen. See, what's cool is if you haven't been part of if you weren't in the previous coaching event and you're going to join the upcoming one, you're going to be able to have these tools that I'm going to illustrate right now. So we had let's see, a breakdown of support. That's going to be, let's see, the breakdown of support was, actually, let me use a different color. So support, you want to use a green rectangle. So our breakdown of support was right here. So this is where price was hitting support. That, there we go. Price came down, hit support, hit support, hit support, breakdown. So that's step one. Step two, we mark the breakout of resistance, and we use a red rectangle for that. The breakout of resistance was here. Here's where we had basing. Price tapped it here, tapped it again, and then we had the breakout. So then if we're using the heat map strategy, take your green rectangle, extend it as far to the right as possible that you can. I'll even have it come off the chart because I can. Take your resistance, extend that off the right-hand side as well because that's where you're looking for your zone. So now we know the answer is B because we drew the heat map. It's not going to be A because A isn't located in our pink and green rectangles. So now when I come to the next slide, that's why price stopped there. Very cool strategy. And again, inspired by your questions of what you were looking to see in the next coaching event. Just wanted to illustrate what you can expect. And if you come to me and say, I'm struggling with my zones, you're going to get a step-by-step walkthrough for that. You're going to get these quizzes, and it's going to help support what you're struggling with. That could be breakout trades, that could be where to have a target price, where to get out of a trade. You know, we all have so many different questions. So that's the purpose of that 30-minute one-on-one coaching session we'll have next week, so I can figure out where we're at in the topics to include in the event. So that's the heat map in simplified forms. And again, we'll go into more detail on that during the event. But again, you can use it for scalp trades as well as swing trades as well. Really great technique. Again, if you're looking for zones, it can help you identify where the best zones are going to be located. So also taking away from what we discussed in the first coaching event. So again, if you haven't registered, or if you weren't part of the first event, that's fine. But some of the 5 key points that I'm seeing from students that I'm going to be teaching for the next event is knowing where the best entry point is. So using the heat map can help you identify the best entry point if that's something you struggle with. Again, a couple people said that that was a main issue for them. That will be in the upcoming event. Another point, knowing the signal to take a long or short trade. So if you're someone who gets in too early to a trade or too late to a trade, then we need to work on the signal that tells us when to go long or short. We shouldn't be getting into trades too early. We shouldn't be getting in too late. We need to wait for that signal that tells us when to go long or short. Knowing when a trend will continue and when it will reverse. So important here, a lot of us think some reversal patterns are actually trends, or some people think a pullback is a reversal. We need to be able to understand the difference. So we'll have a step-by-step walkthrough for that. Knowing how to change time frames to increase your trade outcome. We're going to use all the pictures that we know work time and time again. And when we can see them on multiple time frames, that's going to stack the odds in our favor. And knowing when to close a trade, when are we anticipating a pullback? We need to be aware of what's on the other side of our trade and when should we be getting out, not just going into a trade blindly without knowing if we have enough profit potential. So these were the top 5 points, but I'll be still taking your request for the upcoming event. Let's go to the live markets before I keep going into that. What are you guys looking at for today? Could be a stock, could be future, could be foreign currency future, but what are you guys looking at? Let's see. We'll start with bonds. Mark got it in first. What is going on with bonds? Good one, Mark. All right, so 30-year bonds, daily time frame. This is a example of the 2-candle flip working, red and green candle, 2-candle flip underway. So in essence, on daily time frame, this is a strong zone that we would want to look to take when price pulls back to this area. Now let's see. So if that's the general area where I'm looking to buy is in this 2-candle flip zone, well, on 30-year bonds, I'm not going to take this much risk. 115 to 113, that's a really large zone. That might be almost $2,000 worth of risk. That would be crazy to take. So what we're going to do is we're going to drop down the time frame to find our zone. Now let's come down to a 4-hour time frame. Nice job, Mark. And from yesterday, determining whether to stay in. Yeah, so let's find where the zone is. So if we're using the heat map strategy, what that tells us is that we need to find a breakdown of support. We've got that here. And I'm going to extend that to the right-hand side of my chart. And then I want to see where we had a breakout of resistance. Now, I could mark it up here because that is resistance that got broken through. That doesn't really help me identify a zone because it's still in this really large area right here. The point of the heat map is to get us in a very precise location. So I need some more detail. Let's come down to a 1-hour time frame. All right, so here's where the support got broken down through. Where did the resistance get broken through? Looks like it's right in here before we had that upside breakout. So again, I take that, I take my pink rectangle, extend it to the right. So when price comes back down here, this is where I'm looking for my zone based on the heat map strategy. So within those 2 rectangles, I'm looking for a 2-candle flip, wick over wick reversal. On the 1-hour time frame, I don't have that. Let's come down to a 30-minute. Again, if I'm going to pinpoint where I'm looking, it's going to be right in here in our heat map area. So I still don't see a 2-candle flip, wick over wick reversal. It's somewhere in that pullback breakout if I had to anticipate. Let's come down to a 10-minute. I think this is when that report came out, which may be making it tricky to find that zone in here. No 2-candle flip, no wick over wick reversal. We may need to come down to a, let's see what the 1-minute has. All right. What do we have on the 1-minute time frame? So in our heat map area, we have a, yeah, we've got that wick over wick reversal. Kind of a kind of a combo, 2-candle flip, wick over wick reversal. So it did break above that high wick of that red candle. So let's mark that from wick to wick. And now we have our zone. I'll look to set up this trade. How much risk is that? Does anyone know? 113.18 to 113.23. About how much risk is that dollar-wise? Does anyone know the calculation on that? What's that risk? 113.18 to 113.23. Yeah, great job, Mark. So each tick on bonds is going to be about, or is 31.25. So if you say each tick is about $30, 113.18 to 113.23, you go from 18 to 19, 20, 21, 22, 23. That's going to be 5 ticks. $30 per tick, around $150 worth of risk. So not too bad. That's kind of where I like to keep it, around 150, 100, 150. So I'll set up my order for 113.23 by limit, 113.23, and then I'll place my stop at 113.18. Once I'm done with that, you can go back out to the larger time frame. I'll just take it back out to a daily. And then we don't really need to, to watch it anymore if we're looking for our zone trades because our zone entry is set up. Let's come back to the daily. So there's where our zone is. You can see we've gone pretty far away from our zone. Now, what is price rallying up into right now? Can anyone tell me what this price pattern is? If you don't know, that's okay. If you're part of my classes, nice job, Dwayne. There might be a 2-candle flip in there, but not on this time frame. So yeah, that would be our supply zone, but that's our controlling breakout pivot. So if you don't know the controlling breakout pivot, that's okay. All it is, it's the last bounce or bit of basing before a breakout happens. So this is where price stalled, we broke down. Typically, if we isolate that basing candle, that's where we would anticipate price to stall. So price may pull back. If I'm looking for a trade opportunity, I would anticipate potentially a pullback from this zone. But keep in mind, when we're pulling back, we're going to be coming down into this daily 2-candle flip. That means going short here is going to have limited profit potential. So we could look to go short. But again, when you have a 2-candle flip right on the other side, and this one we have our red and green candle, that means that you may pull back. It just may not be a long running move. We can see if we can set up a short trade. Actually, I'd rather not go short just because that 2-candle flip is already broken out. Let me see your question. The nice job, Mark. In from yesterday. Determining if I should stay in. So I would anticipate a pullback. So I think Mark got in down here. So enjoying that nice run to the upside. So now do we take profit or do we stay in the trade? So I would say we're in an opposing controlling breakout pivot. We may see price pull back. I would say taking profit here would be, it's always good to take profit. I would say, especially when you're in opposing controlling breakout pivot, it's even more favorable to take profits because we could pull back. And then once you do take profit, you can always look for another setup to go long. Ideally, price pulling back down to this 2-candle flip or this zone would give us the best entry to go long again. If you're staying in this trade, just be aware that price theoretically could come all the way back down to this 2-candle flip. So if you want to lock in some profit, I would say maybe moving your stop up, not necessarily closing the trade. I mean, it's a really good trade, trading with the trend. I would just anticipate a slight pullback, but as far as price reversing, probably unlikely because price would be coming down into this 2-candle flip. Does that help, Mark? Or is that kind of what you were thinking? Yeah, so this is going to be a little bit of an obstacle to break through. So we may pull back. What I like to do is I like to take profits when we're in a opposing zone and then re-enter if there's another setup, another 2-candle flip or wick over wick reversal. Nice job, Mark. Yeah, 4-hour time frame, we could see a bit of a pullback, but this trend is pretty strong. So any sort of a pullback, be aware what's on the other side. We may even have a 2 candle flip down in here as well. Where was your entry mark? Did you get in on the breakout, would be my guess, around 1:15:04? Or did you get in sooner? 1:13. Nice job, Mark. So you can see Mark got into his trade after that breakdown in price. Who knows the name of that? When we see price break support and then a reverse back up through support, what's that strategy that we use? When price breaks support, reverses back up through it. Yeah, that's our fake out breakout. Nice job, guys. Greg, Joy, Michael, Diane. Nice. So you see we're putting all the pieces together, all the terminology starts to click. And then what I love about the upcoming event that I'm going to be doing is, again, something like scalp trading that I haven't really taught before. Now I have the ability to teach it in a step-by-step way because that's what you guys are requesting. So even if you don't like scalp trading, it's always good to learn new content. And keep in mind if this is sparking some other things in you of, topics that you're still struggling with. Is it targets? Is it pullbacks? Is it reversals? These are things we can go over in our 30-minute one-on-one coaching session. So we'll jump back into the live charts, but just want to give you some more details on the upcoming coaching event and just how I've enhanced it from the first one. Many of the names in the room here were part of the first event. So if you're part of the first one, this is going to be new content. So you'll be learning more detail on the foundation of what we covered in the first event. It'll be again February 25th, 26th, and 27th from 2 to 4 p.m. Eastern. Again, your trading topics answered live in this interactive series. So you saw before how I was drawing on the charts. There's tools on Zoom that you'll be able to use where you can draw and point to things. If I'm asking you where the fake out breakout happened was, you'll be able to draw an arrow. You can point to it like this. If I'm asking where a breakout happened, you'll have the ability to circle it. And all these tools, what's great is you'll be able to use these on your computer. So those features will be continued in the next coaching event. So your questions answered live using that interactive whiteboard. I'll be continuing to do that step-by-step approach on all topics. Student quizzes, so we saw that today with the one quiz, and doing side-by-side comparisons so we can see what trades work, which trades don't, and looking at those nuances. Drawing on the interactive whiteboard and seeing your answers live. Popular one was just interacting with other students. You guys were able to, many of you were comfortable jumping on the microphone and talking. That helped a lot of other students tremendously, or just typing in the chat, that's fine too. But more of that engagement is huge because it feels more like a classroom environment. So if you're someone who wants to talk and get their questions answered that way versus typing it, you have the ability to jump on the microphone. Or if you want to just text and just type, that's fine too. And then as a new feature, I'm going to be calling on students to share their screen to answer and go over real-time trades. So we didn't do this in the last event, but this was per a couple student requests of the ability to share your screen. So if I ask you a question, you'll be able to bring up your charts and walk through that step-by-step process real time. Again, it's not going to be $2.99 for everyone in the room. The link that I posted at the beginning for $2.49 is going to be for everyone in this session here. I did want to include some testimonials from the past 3-day event. So first coaching event was great, really enjoyed the interaction and the drawing. Second one here, really enjoyed the last 3-day class. You can see some duplicates in the responses. The interaction helped a lot and learning from other students at the same time. So big things are interaction is helping to solidify the teachings. And then this one I kept anonymous just because it included some names, but just want to give a shout out to you guys. I think both of you guys are in the room, but a student did say this, that Greg's comments resonated a lot with my comments. Dan is quite sharp in the way he looks at the charts and dialing through time frames. So shout out to Greg and Dan that other people are noticing you guys in the coaching event. So when you guys do talk, other people notice, and it just helps everyone to learn more. So again, that event is going to be not next week, but the week after, February 25th, 26th, 27th, from 2 to 4 p.m. Eastern. Again, you won't see this posted online. It's or you'll see $2.99 posted online, but the link in the chat is for you guys for $2.49. Yes, everything's recorded. You get the recordings upon completion of each day, and you do get all the content and material from the event. So if you can't attend the event live, or if you're going to miss a couple days, which happened in the last event, you can always watch the recording in the evening and submit your questions to me, and I include them during the next day. Yes, everything's recorded, and you do get all of the content as well. And then again, I want to hone in on this. This was kind of a last minute thing that I wanted to do, but I'm really excited for it. It's new. I haven't done it before, so we will see how it goes. It might be a busy week next week, but for everyone who registers today, using the link in the chat, you'll get that complimentary 30-minute coaching session with me. It'll be one-on-one, so you can let me know, let me know about your trading style. What's your history of trading? What styles do you like? What products do you like? And what are you looking to get from the 3-day event? Is it, again, I mentioned some topics before, but I want you to open up to me and let me know what would help you the most in an event. And I'm going to be including that during the 3-day event. So when you register, again, people are already registered, so just send me an email to tradingcoach@katetrades.com. Let me post that in the chat. So my email, which everyone should have, tradingcoach@katetrades.com is my email. If you're already registered for the event, send me an email and we can get your 30-minute complimentary coaching session booked. Again, the purpose of that is just to talk kind of casually, tell me about your trading, let me know your styles that you like, what you do successfully. If you're all over the place, you can tell me that as well, but it's to be an informal space where we can chat and ultimately give me ideas to post or include in the event. So your 30-minute session needs to be used between February 17th and the 21st. So if I'm pulling up a calendar here, that's going to be next week, next Monday through Friday. I'll be doing those 30-minute coaching sessions because then the event is held February 25th, 26th, and 27th. So I'm getting the coaching sessions in so I know kind of what content to include. And then again, whatever topics you want me to include, I'll be breaking it down into those step-by-step walkthroughs. So I'm excited for that. I'm excited to get to talk with each of you kind of one-on-one. It gives me a heads up of what to include in the event. Let me know where you're at, and that just helps me to do the class more efficiently. If you don't want to do the 30-minute coaching session, you don't have to. It's just a bonus when you sign up with the link in the chat. Any questions on the upcoming 3-day event or the 30-minute coaching? Any questions on the heat map? And we still got some time left, so we'll come back out to the charts and look at a couple more. Yeah, I'm excited to work with you guys. We'll see how these 30-minute sessions go, but I just want to really pick your brains and know what you guys are still struggling with, and then be able to teach it in a way that you guys can understand and have that full transparency. I've never liked in the past when instructors would withhold information. I always felt I wanted to be transparent with students. So whatever you need work on or help with, I'm here to help. Yeah, the heat map is very, very cool. We could go over a couple more examples with the time remaining using the heat map so you can get more of a feel for that. But yeah, it's a great tool to show you where your zones are going to be located. And even if you do swing trading, it's going to be helpful for that as well. All right, Dwayne says the Dow. Let's do it. Yeah, I'm looking forward to talking with you, Terry. Absolutely. That'll be fun. It'll be a busy week next week, but I'm so excited to talking with each of you. It just gives me a better feel for just for how you guys are doing. It's always important to touch base with you guys. All right, let's do the Dow. That's going to be YM. Daily time frame to start. Let's see. All righty. So Dow's kind of sideways. Let's come out. So we did this in the first coaching event. We did our top-down approach, monthly trend. So if you're new to the two candle flip, you can see it here. We've got our red and green candle. That is a monthly two candle flip, which means for this month, we should be looking for long trades. All right, so that gives us an idea of what direction we should trade in because we've got our two candle flip that says look to buy. Who can tell me what typically happens when we're at the top of a move? There's resistance. People are trying to sell here, and then all the sellers get pushed out by the buyers, and we see the next sharp move to the upside. Not fake out, breakout. Yeah, Dan knows that one. That's our short squeeze. So you can imagine how many people, this might have been you in the past or maybe currently, likes to pick tops. We want to try to not do that. That's why we're all about trend trading in these sessions. But yeah, that short squeeze happens when a lot of people are trying to pick the tops and they're selling here. Their protective stops are typically right above that. So when all the traders are getting stopped out, it hits their stops and then it creates the next impulse wave to the upside. So we're looking for a short squeeze. We're looking for a rally based on this two candle flip. Let's come down to a weekly now. Do we have anything on the weekly chart? Maybe the start of a two candle flip. Here's a red candle, and today is Friday. So if this candle closes green, we've got a two candle flip to the upside. And then how we would draw that is red candle, green candle. That tells us look to go long on a breakout to the upside. So you can use the two candle flip either as a zone, or you can use it as a kind of a tool or an odds enhancer to say, let me start looking for long trades. We have the red, we have the green, trend is up, so we're looking to go long. Now let's bring it down to our daily. Ooh, let's use the heat map. All right, where's the best zone located? Well, that's what we talked about in the first part of our session is the heat map. So it's easier for me to do it because I've been doing it for a long time now, but you guys will learn, again, the step-by-steps and the little nuances of the heat map. But we want to find where there was a breakdown of support. So I'm looking for a very clear-cut break of support. I like these touches to the left. We've got a touch, 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 and then a breakdown here. So there's my support. I'm going to take that green rectangle, extend it to the right. Part two, I need a, remembers, after I find the support, I need to find broken what? Anyone remember? Heat map, step one is to find the breakdown of support. Step two is to find the following breakout of. Nice job, guys. Picking it up, I love it. So you're getting prepped for the event. That's wonderful. Nice job, Dwayne, Scott, Mark, Randy, Michael, paying attention. Resistance. The one that's the clearest for me is definitely these three touches here. touch, 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 breakout of resistance. I'll mark that with my pink rectangle. And again, I take my resistance and I extend it to the right. All right, so now I've identified my heat map. My zone is typically inside the pink and the green rectangle, which is where we're pulling back to now. So if the heat map is telling us here's the zone, what do you think? Should I be looking for a long trade or should I be looking for a short trade? What do you think? Nice job, guys. Oh, I love it. See, now that you're part of this session and you know the gist of the heat map, that'll make the 3-day event that much more easier to teach. We can kind of go through that part more quickly. That's awesome. Yeah, we're looking for long. All right, so long in the circle. Diane mentioned long, but it's right into a 2-candle flip. Great eye, Diane, on that one. I love this. Super important to always see what's on the other side. We are rallying into a opposing 2-candle flip. So when we're thinking about it now, we can say our zone is down here. We are looking to go long, but Diane's looking on the other side and saying, well, here's an opposing zone, an opposing 2-candle flip. We want to pay attention to that because then that tells us our profit potential is going to be more limited. When that happens, be careful with the breakouts because our opposing zone is going to make the long trade choppier. So I would rather look to go long in a zone in this circle versus taking a breakout. So that's what it tells me. So as Diane said, perfectly long, but it's going right into a 2-candle flip. So instead of going long here, which would be inside the 2-candle flip, I don't want to do that. Let's look to buy in our heat map zone, which is below the 2-candle flip. That way we get a little bit more profit potential. If this is something that you don't want to trade because profit potential is getting pretty tight and you have an opposing zone right there, then you could say this is one you might want to pass on. But since we're already looking at it, let's find our heat map zone in our circle, and then our opposing zone is up there. All right, let's come down to a 4-hour. If you're part of the first event, you know I like to go down from 4-hour, 2-hour, 1-hour. All right. Do we have anything in our pink circle? We're looking right in here. Do we have a 2-candle flip or a wick over wick reversal? That green candle closed above. We have a base candle. Do we have a 2-candle flip or wick over wick reversal in here? What do you guys think? Do we? We've got this really big one. But where I'm going to be looking is more in that heat map between the pink and the green. So if I chose this as that zone, you could, but we want to typically stay within our heat map, the pink and the green. So that's why I'm focusing more up here. It's actually neither if we really look at it. Did the green candle close within the range of the red candle? Nope. So that's not a 2-candle flip, and we don't have 2 red candles coming down. So what I would do is just come down to a smaller time frame. See, if you're looking at that big 2-candle flip, it's outside of the heat map area. We want to keep it inside the pink and green rectangles. Let's come down to a 2-hour. How about now? Do we have a 2-candle flip or wick over wick reversal? Greg says yes. We've got Terry says yes. Michael says yes. Red and green candle, 2-candle flip. Beautiful. All right, now we got a zone. Now this is where if you're new to the two candle flip, so typically I mark it wick to wick on the higher time frames. As we start going down to the smaller time frames to identify our zone, I typically bring it down to the close of the green candle because we just want to be careful with risk. We don't want to risk a lot on the trade. So the more we can reduce the size of our zones, the better. So instead of going wick to wick, I'll go to the close of the green candle. All right, nice job, guys. Let's see. And let's keep going down. So we're still looking in that pink circle. There could be something else in here. Maybe we can make our zone smaller. What time frame do you guys want to go down to? My process is 1 hour, 30 minute, 20 minute. Do you guys want to skip down to a certain time? Let's see. If not, that's okay. 1 hour, we've got a two candle flip there. We've got a two candle flip here as well. Now I've got two zones. Someone throw out a small time frame, like a minute one. All right, let's do it, Greg. 20-minute. Thank you. I just want to get these zones smaller. All right, nice. That's a good one. So now we have a wick over wick reversal here. We've got this one, we've got this one. So we've got two actually. Now, if I'm looking at zones in my pink circle, and let's say I mark the upper one A and the lower one B, which one do you think is going to be the stronger zone? And why, if you had to take a guess? Would it be zone A or zone B? Anyone want to take a guess? Ah, Wayne says A because it's the controlling breakout pivot. I like it. A couple people said B. B2 wiki, zone A looks like a stronger breakout. Yeah, you can see how B, if we're looking at strength, like Terry's mentioning, B was kind of casual or gradual, where this was actually formed in the overnight session. You can see there wasn't a whole lot of volume. Price rallied, it drifted down, had a pretty strong move up here. A lot of this was just from the overnight session. The other thing with the heat map is that you typically want to be inside the pink and green rectangle. B is a bit lower, I would say. It's more on the lower part of the green. You can see A is more in the middle. Yeah, Dan's bringing in those other odds enhancers. Bigger move. You can see if we're looking at how far A went versus how far B went, A had a much stronger move to the upside. More volume was behind it. So I would probably say A. And again, using the heat map, we'll talk about this during the event, is that you want to, oops, got rid of our support. It was down here though. We typically want to find your zone that's located in between the support and resistance. The reason why is because that's typically where the largest imbalance is happening. So let's focus on A. We have our wick over wick reversal zone. So that places our entry at 44,544, stop at 44,445. Kind of a large zone. If you want to choose this wick over wick reversal, you could as well. Anyone else see an odds enhancer with that wick over wick reversal about the location? What makes this a strong zone location-wise? Nice. Dan says fake out, breakout. You bet. See how price broke support. Trying to draw the rectangle. support, breakdown, reversal. That's our fake out, breakout. Strong move up, price retested. You can see this wick tried to drop back into it and failed. So yeah, that would be a really strong zone. And then I always like to look left and find if it's dropping into another wick over wick reversal, which it is. You can see over to the left, that's our other wick over wick reversal. So let's set up this trade and we can review it maybe in our coaching sessions next week. Our entry, so wick over wick reversal, again, is just two red candles coming down, breaking above the high wick of the red candle. Entry 44,561. $44,561. That's going to be a buy limit order. And then my stop is going to be at 44,493. One strategy I like is that if your zone is too large, what I'll do is I will put on a 50% zone marker. So by making the 50% line thicker and blue, that can allow me to do a smaller zone, so less risk. And then you could do your entry at 44,527 instead of 44,561. And now we wait. So we use the heat map to find our zone. That's important because it gets us in the right location of where we should be looking. So if you prefer swing trading and you like the higher time frames, heat map's still going to apply. So let me see if I can find a example of one. So you can see these touches here. Now, if you were looking at these touches where price came down, it looks like it just hit the middle of a green candle. The heat map can unveil zones that you can't really see. I've gone over time a lot, but man, there's just a lot of stuff. So if price looks like it's just dropping into the middle of a candle, use the heat map to find where that hidden zone is. So if I'm looking left, here was the support where price was being held up. Where was the zone or the resistance where price was being held down? All in here. Mark that with a pink rectangle. And then you extend those to the right. So our zone, you can see, puts us right in between those two candles, and that's exactly where price came down several times over here. And it was tapping, but a lot of us might have been looking over here and said, no, well, it was going to come deeper, and it eventually did, but there were some nice trade opportunities here. So if you find that price is changing direction in a big green candle or a big red candle, and it doesn't look like there's a zone there, the kind of secret or the key is using the heat map to find those hidden zones. And we'll go into more detail on that during the upcoming 3-day event. It's really cool. I'll do one more chart. Anyone want to do the last chart to look at? That one was fun though, doing the Dow. We'll see if price can come down to our zone. Let's do one more and then we'll wrap up. All right, Mary says S&P, let's do it. Let's see if we can use some heat map zoning. All right, S&P. We have a 2-candle flip down here, red and green candle. So we'd be looking for a long trade down here. We have a 2-candle flip up here. That's why price has been stopping. So if I'm going to look to go long, I'd rather see a pull back down into here. Up here, more likely for a short trade. Well, we got to be aware of the trend. On the S&P, let's come out to the monthly time frame. So a lot of these equity indexes are having 2-candle flips. Yeah, so see the red and green candle on the S&P? What was the one we looked at before that had a pretty similar price pattern? The Dow. So monthly chart, if you see a two candle flip, that says look to buy. So you can see that two candle flip is about to start pushing us to the upside. So that's a tool I like to use if we have a monthly two candle flip. And it's just the red candle, the green candle, that says look to go long the next candle. Then we're trading with the momentum. Weekly time frame. Here we go. This is the one I was waiting for. Can you see our weekly two candle flip underway? Red and green candle. Breaking out. So again, not looking for shorts. We should be looking for longs. Where are we looking to go long? Well, we want to use our heat map for that. We have our two candle flip, as I mentioned before here, but that's a really large zone. Let's come down to a smaller time frame. What time frame do you typically look at, Mary? When you go to or if you go to the lower time frames? Let's do a 4 hour. So we have a daily two candle flip. Let's come down to a 4 hour. And this is where I start to look for the heat map. Right. Who can tell me what step one is for the heat map? Step one, I look for a break of what? Perfect, Scott. Look for a break of support. So the biggest break, I look for the most extreme one, I would say in here where price support, broke through that. So I'm going to grab that and extend it right. What's step two? Look for a break of after I look for a break of support, I look for a break of, there we go. Thank you, Scott. Break of resistance. Looks like it was happening right in here. All these wicks. I'll mark that with a pink rectangle. And I will extend that to the right as well. What is the lowest time frame? Do you draw is that the heat map? Lowest time frame, you can use any time frame. So like the example that I used in the PowerPoint here, the heat map I drew on a 15-minute time frame. So you can try the low time frames. I typically don't look at tick charts, but you could probably try it there as well. But this applies to any and all time frames. Yeah, that's the beauty of it. So swing traders, you'll kind of stick with what I'm doing right now and getting us in those higher time frame locations. Yeah, you bet. Good question, Dwayne. So can you see how we've got a two candle flip right in our heat map support and resistance? So that's the zone that we're looking to go long in because that's our heat map zone. So we've got a very good looking 4 hour two candle flip. What would be the next time frame you'd want to look at, Mary? Because that's a pretty wide zone. So let's make it smaller. What should we go down to next? From a 4 hour. I like it. You do the top down approach too. Let's do the 1 hour. I like it. And 15. Ooh, I like the 1 hour. Nice two candle flip there. Beautiful. All right, nothing else, just that two candle flip. Let's do the 15 then. So as we come down in time frame, all we're doing is finding our zones within our heat map location. 15-minute time frame. So I could choose, so in this whole area here, we've got, it looks like two zones. We've got this lower one. We've also got this one up here in that circle, which I like as well. I'm going to mark that one too. Red candle, green candle. Which one do you think was the stronger zone, the upper zone or the lower one? Which one had more volume, more strength, stronger move away, the upper or the lower zone? Yeah, the upper. So let's get rid of the lower one. We'll focus on the upper one. It's also right in our heat map zone, which is nice. Good question, Dwayne. Let's see. Once you draw the heat map, would you even consider the controlling breakout pivot above? You could. So we'll talk about this during the event. So what Dwayne's talking about is this pivot here, this controlling breakout pivot, I believe, where price pulled back and broke out to the upside. You would still consider that, given that maybe the daily chart has a 2-candle flip, given that price has a wick over wick reversal on a daily time frame, you can still use it. But you want, at that point, we'll bring in more odds enhancers to justify the zone. You don't want to get rid of it completely because price may never come back down here. If it does, I would say this would be the strongest zone, but we can still use this one to trade with the trend, given we have other setups like another 2-candle flip setup, another wick over wick reversal inside that controlling breakout pivot, then yes, absolutely you would use it. Yeah, you still want to use everything that we've talked about, and a nice controlling breakout pivot like this one, you would still want to consider. That's a great question, Dwayne. I like it. Yeah, don't get rid of all your other analysis of what you do of other controlling breakout pivots. They're still important and can give us trade opportunities. This is just where we're finding a really strong zone. All right, let's come down to a 5-minute, see if we can make it smaller, and then I'll set up this trade. 5-minute. All right, I can make that a bit smaller. 2-candle flip. Like that. So entry 60.82, stop at 60.70. That's still a pretty wide zone. Oh, looks like the upper one hit actually. Notice how price came down here in our heat map zone. That's a 2-candle flip there as well. So we've got two on top of each other. So you could use either one. Got a 2-candle flip there, 2-candle flip down there. That makes the zone pretty large. So you can go down in time frame again. You could choose maybe one zone to take. You could do a confirmation entry. There's different strategies that we'll talk about for how to get into the trades. Why not? I'll just come down to a 1-minute. Try to make these as small as possible. Here's our lower 2-candle flip. At this upper one, I'll bring my entry down to there. Perfect. So 2-candle flip, 2-candle flip. Once you have your zones, you can come back out to the larger time frame if you want. And set up your order. So I'll set up the upper one first since that one's the closest. That'll be an entry of 60.87, stop at 60.80. I'm going to do it this way. Buy limit 60.87, stop at 60.80. Again, if that's too large, that's going to be 7 points, a little over $300 worth of risk. That's kind of steep for me on the full size contract. You can do the micro contract. That'll reduce it by 1/10, or it'll bring your risk down to 1/10 of the risk. Or you could do a 50% entry like I did before and bring your entry down to the 50% marker. All right, busy morning. Let's see, upper is a 2-candle flip and the last basing before breakout. You bet, Dwayne, Yeah, see the upper one? This was that last, what do you say? The last basing where price was trying to break out, trying to break out. Last really strong pullback, rallies. That I would say that's a pretty strong zone as well. You bet, Mary. It's been good seeing you and everyone else here. Great session today. This has been so much fun. I appreciate the interaction as always. Again, if you're signed up for the 3-day event already, send me an email if you want to do the complimentary 30-minute coaching. Again, I'll just be doing those for next week, February 17th through 21st. So send me an email. My email is tradingcoach@katetrades.com. And just let me know what days and times work best for you for your 30-minute time slot. Any day next week, Monday through Friday, should work. Again, the purpose, if you missed it at the beginning of the session, is to get an idea of the topics that you want to discuss. We focused most of today's session on scalp trades and entry points. That's just one topic that one student emailed me and said, hey, can you help me with scalp trades? And you can see that that's created pretty much an hour and a half of a class where I'm able to teach it, discuss it, answer questions. So this 30-minute one-on-one coaching session with each one of you guys, just you and I, is to find out what is that topic that you need help with? What does your trading look like up to now? It's kind of like a mini boot camp coaching. And then I'm going to take that information and then put it into the 3-day coaching event. So again, email me if you're signed up for the event. Let me know what days and times you want to do that coaching. Discuss the topics you want to see in the upcoming event. And then the link in the chat is for $249 for you guys, not the $299. So the $249 just for everyone in here. And you'll see that on the follow-up email to the smaller group of people. But that's just for you guys. So happy Valentine's Day to each and every one of you. Appreciate you being here with me on this Friday. If you have any questions, feel free to let me know. But other than that, have a great day, everyone. Appreciate you staying with me for another 30 minutes. Have a great day, everyone, and a great weekend. Bye-bye. Thanks, Greg.